Yeah, so is my screen visible to everybody?
Yes.
Okay, thank you. Thank you, Harsh, for the introduction. Yeah, my name is Bhavin Shah. I've been working with Motilal Oswal as a technical analyst, and it's good to be in this session today. And thank you all for joining in. I think it's going to be an interesting session. We will keep it very simple, and yet it will be a powerful tool for you to understand how markets work and how an investor or a trader who wishes to take position and benefit out of it, it's going to help a lot. So moving on to the presentation. So what we will do is today understand the trends, what kind of trends the market has, and how do we take positions and how do we take the positions, and then we will see what kind of chart patterns are there in the market, and how do we use them to analyze a particular stock and take a position in investing or for trading. Yeah, so is the next slide visible? Can anybody please confirm?
Yes, it is.
Okay, thank you. So now moving on to the world of technical analysis, it's a very broad and holistic subject wherein it has a lot of things. So there are number one foundation which is there in technical analysis is the trend. So once you are with the trend, it becomes very easy to move on to trade, enter the trade or exit a trade. So the first and foremost important thing in the market is the trend. So we will discuss about the trend, then we will discuss about the chart patterns. So these are the two primary objective for us in the presentation today. Also, the important aspects apart from the two which we will discuss today is momentum. So once you know the trend, then you know there is some pattern that is being formed in a particular chart. So after that pattern is seen or identified, the next part is the momentum, whether the stock has momentum, whether the sector has momentum, whether the entire market has momentum, or the market is still on the sideways, or market is choppy, or the market is on the it's going to go upside or it's going to go on the lower side. After we identify everything, the important part is the entry. How do we enter a trade or how do we enter an investment? And then the next part is how to ride the entire trade or the investment and exit it with a good amount of profit. And along with that, the most important apart from the trend is the risk management. So we need to know what kind of risk a particular stock or the index will have while trading or investing. So if the risk is managed properly, then the returns will be seen and it will be multifold. So let's move on to the trend. So it's always said, and I think most of us here in the markets know that the trend is your friend. So we should actually never buck the trend. So if the market is in an uptrend, we should stick to the stocks on the long side. If the market is in a sideways movement, the market will be choppy, and then we should actually wait for the market to give us a trend, be it on the upside or on the downside. So this is one of the fundamental things that we need to understand regarding the trend. The trend is your friend. You should always be on the side of the trend. So now there are three types of trends that I've discussed. So one is the uptrend. So what we usually do is when the stock moves up, we try to see that the stock is going up and we try to find shorting opportunities. But ideally, what we should be doing is when there is an uptrend, we should be holding on to the long positions and we should ride the uptrend and exit with a handsome profit. Same goes with the downtrend. Whenever there's market which is going down or it's in the downtrend, the general perception is that we keep on buying the dips, but that's true that buy on dips should be actually be done in an uptrend. So it's very important for us to understand whether the market is in an uptrend or the market is in a downtrend. So in a downtrend market, the ideal thing to do is sell on rise. Then there is one trend which is a sideways, which is a very consolidative phase. Sometimes it's one of the most painful phase in the market. When the market is very sideways, it becomes volatile as well. It also becomes very choppy. Even the stock individually stocks move very in a choppy manner, so it becomes very difficult and it's a challenging time. But then eventually there is a trend that is usually coming up once the sideways move is over, be it on the upside or on the downside. So looking at the chart now, this is the chart which shows that this is a chart of Infosys. Now if we see Infosys, I think this is the weekly chart. It's consistently moving higher. I think from 2020, the lows of close to 500 rupees and the stock has gone up to 1900, 1950 levels in the recent trading period. So if we had to enter a stock, we need to have the stock into an uptrend and we should keep buying a dip in the uptrend. It's very clearly visible that initially in 2018-19 the market had been slightly on the sideways, and then the trend started on the upside, and the arrow that is seen is the entire upside that is there in the stock. So our objective here is to be in a market or a stock which is in the uptrend if we are an investor or if we are in a trading position. Second thing is the downtrend. Now the downtrend, if we look at Walcott, now it's since 2015, after the 2015 high, I think it's consistently moving lower since 5 to 7 years. It has actually done nothing, and every rise has seen a negative implication and a selling pressure, and the stock kept on moving lower. So the most important thing here is that we should know that we should be in a stock which is in an uptrend if we want to buy it, and if we want to short or if we want to exit any of the position, we should be looking at the trend. If it's a downtrend, we should not be holding on to the positions, or if it's in futures and options, we can sell on rise. Consistently we get a good move. Now looking at this chart, it's a sideways move. Now if I say sideways, since 2013, this is the monthly chart of ITC. If we look at it from 2009, which is there in the on the screen, the chart of ITC was in a uptrend. But if we look at 2013 to 2021 period, the stock has actually been in a sideways. It's a very broad range. On the higher side it's 350, on the lower side it's around 150, but the range is very big, but it has actually done nothing. And if we were to be in this stock, the returns would have been very lower, far more lower than as compared to the returns that we've seen in Infosys. So to be in the market, we need to know the trend on the larger degree. So how do we identify a trend setup? Basically, if it's a long term, we have to see that the stock has to be above the 200-day moving average. It's a very long term trend which shows that the stock trading about 200 DMA or the 200-day moving average is going to start a new trend. Or if it breaks the 200-day moving average, then the stock has weakness. So that's one thing. Second is, if we are in the medium term, then a very good moving average is 50-day moving average, which gives you a medium term outlook. And when we have to see a short term move, a 20-day moving average is going to help us understand whether the stock is in an uptrend or the downtrend. If the stock is above the 20-day moving average, means it's consistently doing well above its averages, and it may continue on the higher side if it's trading above the 20-day average. And if it's lower than 20-day average, then we may expect the stock to perform on the negative side. So moving average is one part which helps us identify a trade or a trend rather, whether the stock is in an uptrend or a downtrend. Then this, I would like to just want everybody to pay more attention to this time frame setup, wherein we're going to discuss that a time frame for every investor or every trader or every segment is different. So if a person wants to invest, the ideal time frame would be monthly or weekly chart, where we have to see the monthly and weekly chart and take a broader view. If a person is wanting to have a medium term trade, daily and weekly is going to help. And if it's a pure investor, a pure trader, hourly and daily would help them to take the positions. So the most important thing here is that the higher time frame always rules. So this is a rule which I think everybody should understand, that we have to see, whenever you want to take a position, you have to see what the stock or the index is doing in the higher time frame. So to start with, first we have to look at the monthly chart. Any chart, any stock, you have to see what the stock is doing on a monthly basis, whether the stock in monthly is on the trend is on the positive side or the trend is on the negative side. Then the weekly is going to follow the monthly. The weekly chart will follow the monthly chart. So once we are clear that, for example, the monthly chart is showing a rising trend or a positive trend, the weekly chart has to follow the monthly chart. So after having seen the monthly, we come to weekly, which gives us a good view what the stock is going to do. And then when we take positions, be it any retracement or any support zone, on the daily, we can take the trade. So I'll just help you with the example. Now this is the example of ICICI Bank, where we have seen that ICICI, since the March 2020 lows of close to 260, 240, has consistently doing well, and it's close to 800 levels. So once the stock has started picking up on monthly, so we have to then go to a lower time frame, which is a weekly chart. Now on the weekly also, the trend was showing that it's going to go on the positive side. So once we get a confirmation on the monthly chart that the trend is positive, we come back to weekly. We see the trend in weekly as well. If the weekly is in sync with the monthly, Then we jump into the daily chart if you want to take a position. Now, once we are clear that ICICI Bank is on the uptrend and it's going to go higher in weekly and monthly, so definitely the daily chart is going to follow the weekly chart. Weekly chart is going to follow the monthly chart. So we know that any dip on the daily should be utilized as a buying opportunity in ICICI Bank. So the chart that I have shown you here is a daily chart of ICICI Bank. We are clear on the trend that it's at an uptrend. Now, whenever on the daily, when we see that there is a fall and the stock starts to rise after the fall, which is a first arrow that on the lower side which is seen, you could take the position. Then again, the second arrow that is seen, once again the stock started moving lower, but then eventually it again turned back higher. We got another position to enter. So first we would have entered around 550 odd levels. Second, we entered around 600 levels. Then it consistently moved higher. Again, there was some choppy move. The third arrow that we see is close to 680, 690 levels. So we got a third entry in ICICI Bank. We got a rally till 870, but still the monthly and the weekly charts are on the positive side. There's no worry. We could again see that there is a fall from 870 to 720 levels, but then again after it made a bottom, it started moving higher. So we got another entry around 700 levels. So this is how, if we increase our position sizing looking at the multiple time frames on the chart, and we take multiple entries based on our analysis, I think the probability of making more amount of profits or the percentage return increases dramatically. So this is a very important aspect while trading or investing, that we should be looking at a higher time frame and follow the higher time frame. Now, moving on to the chart patterns. There are a lot of chart patterns which are there, and these chart patterns, they help us identify a stock which is there in the momentum, or the stock which has given a nice breakout and is going to do well in the coming trading sessions or the coming months or the weeks. So the patterns that work really well, and I have been experiencing this, it's my own personal experience, that a few patterns which are mentioned here, for example, if we look at breakout, it works really well. Cup and handle pattern, it gives good returns. Then we have a rounding pattern, flag and pole, double top, and double bottom patterns. These are the patterns that usually are seen in the stocks. They keep forming very often, and once we are able to identify such patterns, the probability of winning trades increases. So now I would share the live examples of the breakout trades in every pattern. So now this is the chart of Tech Mahindra, where we have seen that Tech Mahindra had been in sort of a channel, and then we've seen a breakout that has come around December 2020 or early 2021, close to 1,000 level. And it was a very clear breakout, since it had been in a range for about 7-8 years. Since 2014, it had never crossed 950 or 9,000 levels, and it was consistently moving in this kind of a channel. And once breakout has been seen or identified, and it's a 7-8 year breakout, the stock actually moved in 7 to 8 months from 1,000 levels to 1,800 odd levels. So what we have to look in a chart, this is the monthly chart. If it is a monthly breakout, and if the breakout happens after a very long consolidative phase of, say, a multi-year breakout, it's going to work really well. So this is one example of Tech Mahindra, how the breakout works. Then we have a chart of Balrampur Chini, where we have seen that we had a breakout. There was a consolidation initially, and then there was a breakout around 340, 350 zone, and the stock moved higher from 350 odd to 450, 460 zones. So we have seen that after a consolidative move, there was a quick move after a breakout and the stock moved higher. Now, looking at the chart where there is an orange arrow, so initially we look for a target of the entire consolidative phase. So this arrow, which I have replicated after the breakout, the ideal target would have been 390, but then the stock has moved well past that level and it's actually trading near the all-time high zone. So this breakout, whenever there is a breakout, along with the momentum, if we capture the trade, it's going to give good move. Again, now this is a chart of Indian hotels. Now this is a very similar chart to Tech Mahindra. Now, if we look at the chart, after the high of 2008, close to 150 zone, uh, Indian hotels had been a consolidative phase in a very broad range, and now recently it has crossed that 160 mark zone, and it's actually consistently trading above that level. So here the target, the arrows that I have shown, the entire consolidative phase, we are added to the breakout, and the stock is expected to do very well. Also, the momentum is very strong in the breakout stocks. So we should also take support of momentum, which gives us a quick check on the uh, post breakout move. So Indian Hotels is definitely a stock which is expected to do well after the breakout. The next comes the cup and handle. Now, currently, we've seen a cup and handle is basically, we've seen a very rounding sort of a pattern which is formed, and then the stock moved slightly higher and then again drifted lower, where I have shown it in the parallel lines called the handle. And then we have seen a good move above that breakout level. So this kind of cup and handle pattern also works well in the market, in the stocks specifically. So this is one pattern apart from breakout that gives good returns once it is identified. Another important pattern similar to this cup and handle is the rounding pattern. Now this rounding pattern is basically, the stock is actually in a consolidation. It is at the bottom and it is forming sort of a rounding pattern and then giving off a breakout. So again, for the pattern target, where there is a red line that I have marked, this is the chart of Vodafone Idea, where we were expecting it to do well once there was a breakout. This is a weekly pattern, weekly chart, weekly rounding pattern, which has almost breakout after 11 months of consolidative phase, and it gave a breakout around 11 odd zone and moved higher. So this pattern still holds because we are trading at the breakout level again. So this is a retest of the breakout of level of 11, and we may expect that the stock to do well and inch higher towards the 18 to 19 level mark. But there's one thing that a rounding pattern here is that the stock does not have very strong momentum as compared to the stocks that have given a breakout on the higher side or a fresh breakout. So here sometimes it may happen that it may again come into consolidation due to lack of momentum. So that's what I mentioned. There has to be momentum in the stock. The stock has to be doing very exceptionally well fundamentally. It should have sound balance sheet and other fundamental aspects which help it move higher and keep entering the uncharted territory like we've seen in Tech Mahindra and Infosys. Then we have a flag and a pole pattern where this is a chart of Praj Industries where we have seen a very sharp move from 60 odd levels. So this pattern resembles a flag where there's a pole which is the sharp rally from around 60 odd levels to 380. Then there is a small consolidation, maybe a few months, where we have seen that the stock is actually consolidating in a very narrow range. And it's forming sort of a flag. And then it's again started a move on the higher side. So breakout was there of the flag in a pole again near 360. And you've seen that it's almost touched a high of 440. And there is very strong momentum in this stock currently as well. So this flag and pole does really move well. Where again we have a chart of Tata Motors where this stock also had a similar pattern as which is seen in Praj. We have a sharp move which we have seen from 100 odd levels to 300 levels. Then we have seen that for a period of say January to September, October, the stock was actually trading in a range and forming a flag sort of shape in a consolidative phase. So the range of this flag was say 360 on the higher side and on the lower side it's 280 to 260. It was consolidating and then eventually it's given a breakout around 350 and then headed higher. Similarly, again, where we see the flag and a pole, which we had seen earlier, is also seen currently. If we take the lower levels of 260 to 520, that's again a pole. And again, the stock is consolidating in a range of 440 to 520. So as soon as a high of 525.30 is crossed, again there would be a breakout of a flag and a pole pattern, and I think Tata Motors should ideally do well. So these patterns, they do really work well if they are captured at the right price and at the right time, and if we ride the entire trend on the higher side. Then coming to a double top pattern. Sometimes when the market is moving higher and in an uncharted territory, there seems to be some stocks where they make a similar high or the high is almost or on the similar lines of the previous high. So here where I have shown there are two circles. So the first high was close to 7600. Then the stock slide towards 6400. Then again it moved higher, and if we look at the second circle, similar high was made. So this is a sort of a double top pattern which we have seen in L&D Infotech, and since then it has started correcting. So one important thing here to note is the trend line on the lower side around 6400 that you see, that is the neckline that we call 6400 level, the trend line. So break of that confirms the double top pattern, and then the entire height which is there from the high of 7600, 7500 to 6400 near the neckline, that much amount of move is expected once the neckline which is broken at 6400 is seen, and then it may head lower and the target comes of the entire height of the double top pattern, and it comes to lower levels of 5200. So we've seen it's almost touched 5700, and we expect that the stock may move lower and meet its double top target, which comes close to around 53, 5200 levels. So this is a pattern which is usually very useful and very helpful when there is some sort of a reversal in the market, or a particular sector, be it individual stock or even the sectoral charts, we can identify a double top pattern, and that can help us take a good trade. Similar to a double top pattern is a double bottom pattern. The double bottom pattern is actually a sort of a, once a downtrend is over, we expect, which shows the first circle. So we expect that the stock again retests that level. The second circle again here. So around 1300, 1320, ICICI Lombard has taken support for the second time and started moving, and it has formed bullish candles, and it started moving higher. So now again, similar to the double top pattern, this is a double bottom. So a double bottom support is seen at 1300 level. The neckline is the high between the two circles. The high is close to 1470. So once the 1470 level is broken on the higher side, there will be a confirmation of the double bottom pattern, and then we can replicate the entire move from 1300 odd levels to 1470. The difference of 1470 minus 1300 is the arrow that we've seen here. We can expect it to inch higher towards 1600 or 1650 odd levels. So double bottom pattern also helps when the market is on the moving, once the downtrend is over, and then if we spot this kind of a double bottom pattern, it really helps pick up on the higher side. So just to summarize on what we have discussed today, there were two important aspects that we discussed. One is the time frames of the trend. Number one is the trend. We need to have a trend. We need to have an understanding of the trend. Trend is our friend. We should never bug the trend. And we should be on the side of the trend, is the one thing. Second thing is the time frames. We should always be looking at higher time frames. If we are an investor, we should be looking at a time frame of monthly and weekly. If we are a medium term investor, weekly and a daily would help. And if we are a trader, then daily and hourly would help us take a good trade or investment opportunity. So the higher time frame always rules. We should follow the higher time frame, and the lower time frame always follows the higher time frame. So the monthly, weekly, and daily. So the daily follows the weekly follows the monthly. And then we've seen the chart patterns, breakout patterns, multi-year breakout, they work very well. The stock moves very quickly once it is in momentum after the breakout. Flag in a pole pattern also does really well. It should be identified at the right time, and the entry has to be at the right price to give us a good move. So I think that's it from my side for today on the trends and the chart patterns. Two more aspects that three more aspects that you have to see is momentum. If once we add momentum to this analysis, it's going to help us identify a stock which is in momentum, which can give us a very quick move. Then comes the entry and the exit. Once we know that we have entered a trade looking at the chart pattern, we also should understand that the targets that come as per the patterns that we discussed, that has to be identified, and we have to project that kind of targets, and we should make a good exit at a certain level. And of course, risk management, it's one of the most important aspects to be in the game for the long term. So that's it from my side. I think we will open the house for questions, and I think Harsh, if you would want to uh, complete your presentation first and then move on to.
Thank you, sir, for the informative session. We will open the questions from the participant. Uh, Participants, if you have any questions, you can write in the chat box. We are taking it one by one. Bhavin sir, there's one question: DMA or EMA, which one to be followed?
Yeah, so I think Prabhakaran is asked such a question. So now see, the daily moving average is basically an average of daily, whereas EMA is exponential moving average. It is slightly more smoother than the DMA. So we can use EMA, and it's slightly more smoothened. So it's going to help us get a good move.
There's one question or comment like this: rounding bottom seems very similar to cup and handle pattern. So,
Yeah, so rounding bottom usually is at the bottom after a down move in a particular stock, and basically when the stock is consolidating, we find this kind of a rounding pattern, which is actually similar to a cup and handle, but when the cup and handle pattern is at the top, whereas the rounding bottom is at the bottom uh, of the entire chart or the entire move. So that's a slight you know difference in the both the patterns. So cup and handle also can come near the bottom, but the more effective pattern is the cup and handle that is there near the breakout.
there's one question from Sachin Kumar Sahu.
Yeah,
What is exactly time frame is best to identify these patterns?
see, basically that depends on what kind of activity we are in. If we are an investor, uh, we should look at a monthly chart and form the patterns on monthly, because we can expect the investor to hold a particular position for a longer period of time. So that is the best for a long period. Long term investor is a monthly chart. For a medium term investor or a medium term movement, say for about 6 to 8 months or 12 months move, we can look at a weekly chart and trade. And if we are a short-term positional trader, say 15 days to 1 month or 3 month period, then these kind of patterns which emerge on daily would ideally help. And if we are trading, then we should again go lower than the daily and we can enter on the hourly chart. But whatever time frame that we are actually going to enter in, we should always have a view of the time frame on the higher one time frame higher. If example I am a short term trader or a positional trader, I will first look at the daily chart to take my entry in any position, and then before taking an entry, I'll take a view of the weekly chart as to what the stock is doing on the weekly, and accordingly take a trade in a daily. I think I'm clear on this, Mr. Sachin.
Sir, the participants are kept mute.
Yeah, no problem, no problem.
Yeah. So with your this comment, I I think you have also covered this query that all the chart patterns can be seen in all time frame.
Yeah, correct.
Uh, Arushi has a question that I have a question regarding idea Tata Motors Yes Bank. Arushi, I think this is stock specific comments we won't be able to give. Bhavin sir, am I right? At this platform?
Yeah, that's correct.
Yeah. One query from Rajesh. What is riding the momentum? What is MO entry? Momentum entry.
See, momentum is basically the speed at which a stock is going to perform, right? So if a stock has strong momentum and it is at a breakout, it's going to help us move faster, and we can expect the targets to be met without any move on the negative side if we are on the buy side. So momentum also plays an important role. Now if we have a breakout but the stock does not have momentum, then the stock is not expected to do well as the stock which will be at a breakout with the momentum. So that's very important, that the momentum has to be on your side along with the time frame and the breakout. And for momentum, there are a lot of indicators like relative strength index, we have stochastics, we have MACD. So these are individual studies that will help us identify whether the stock is in momentum or not.
Okay. So there's one similar question from Prabhakaran and Rashi Sikka, that can you suggest any website from where we can learn more about technical analysis, basics of technical analysis?
I would suggest you to read a book on technical analysis by Martin Pring, which is Technical Analysis Explained. So that's a very important book for anybody who wants to understand the basics of technical analysis. It's a very good book, and you can it's like a Bible in technical analysis by Martin Pring. Technical Analysis Explained. So I think I would recommend the book to be read.
Okay. Next question from Shardul Vagolikar. Please suggest chart websites.
Chart websites, you can use investing.com. You have chart links where you get free charts, and you have scanners also in them. So I think these two websites are which I also use, and we've got real-time charts on investing also. So and you've got all the studies like RSI. If you want to see, if you want to make any channel or any trend line, whatever you want to make, it's possible in investing.com. So that's going to help you.
Sir, there's one request key. If you can please once again repeat about the long term 200 DMA, medium term 50 DMA, short term 20 DMA.
Okay.
A quick
Yeah,
maybe.
yeah, yeah. So whenever you have to see whether the stock is in a trended market, or a stock is on the positive side, or the stock is going to perform well, the stock has to trade above the 200-day moving average. So once the stock is above the 200-day average, then we can expect the stock to move higher. If it's below the 200-day average, then the stock may not be performing as much as it should be, and it may drift lower. So that is for very long term. If you want to take a view of close to a year, so we usually have, I think, 240 sessions in a year. So that's the average of 200 days. So 1 year average, and in 1 year, if the stock is not trading above its average price, then there is something that we don't know, and the price may drift lower. So that's one thing for a long term view. 200-day moving average has to be seen. Medium term view, we have to see 50-day average. 50-day average, when the stock is above the 50-day average, medium term, it should perform well. And if it's below the 50-day average, then the stock will not perform, or it may drift much lower. And 20-day average is used basically for short-term positional trading, wherein it's a 20-day average, roughly a month's average. We usually have 20 sessions, 22 sessions in a month. So once a stock is above its monthly average, say 20-day average, it should ideally do well for the next couple of months if it's trading above the average. So that's how we take a view looking at the moving average. Basically, it's a crossover of moving average. Once the price crosses the 20-day average, it's on the uh, winning side, or it's expected to do well and move higher. If it's breaking the 20-day average, then there's something wrong, and the stock may drift lower. So that's how we take a view, which is moving average is one parameter which helps us understand whether the stock is going to do well or no. The stock is going to do, or stock is going to go higher, or it's going to go lower. So when we are investing or trading, we need to look at the moving average. Then we look at a breakout that is there, along with the trend, momentum, all the aspects has to be seen. Yeah. So
Thank you, sir, for explaining. Sir, there are users asking the to repeat the book name. So if I am not wrong, it's Technical Analysis Explained by
yeah,
Martin Pring.
yeah.
Okay, I am writing the name, the book name in the chat box, so any user can just go through that. There's one more question. Moving average. When will you use exponential moving average and weighted moving average?
See, usually we use exponential moving average or a daily moving average. Weighted moving average is giving importance to the recent period. So as of now, most uh, important to use is a DMA or a EMA, which is exponential moving average or daily moving average. But exponential is more smoothened version of a daily average, and weighted average is more smoothened version of exponential. But usually everybody in the trader fraternity uses the exponential moving average. They are very comfortable using it, and exponential moving average gives a better view. It removes the whipsaws that are there on the DM, the daily averages, because it's slightly more smoothened. So I think better to use EMA as of now.
Okay, sir. Sir, there seems last question from Rashi Sikka. Ki if stock is about 20 DMA but below 50 DMA, what does it indicate?
No, see, when the stock first is 200 DMA, stock has to be above 200 DMA. Then the stock has to be above 50-day average. Then the stock has to be above the 20-day average. If we take a triple moving average, that's actually basically a concept of triple moving average. So once the stock is above all the averages, it is expected to do well. Now, to answer your question, if it's below the 20-day average but above the 50-day average, it means that it's going to be in a consolidative phase, and we should actually wait for it to move above the 20-day average. So ideally, it should be above 50-day average. Once it drifts below the 20-day average, we should wait for it to move above the 20-day average to pick up momentum. So once it's above all the averages, there will be momentum that is likely to pick up.
Sir, would you like to take this question? Ki, sir, if moving average is mix of candle, what it's mean? What does it mean?
Sorry, I didn't get the question. Mix of candle in the sense?
Singh, I am just unmuting you. You may ask your query. Just a second. Amol Singh, sir, just unmute yourself and you may ask the question.
हेलो मैम. हेलो.
हाँ जी.
हेलो.
यस यस यस.
सर हिंदी में बात कर सकते हो सर?
हाँ हाँ, बोलिए बोलिए, नो प्रॉब्लम. हाँ, बिंदास.
ओके सर, मूविंग एवरेज कैंडल में मिक्स है, इसका मतलब है कि 20 डे EMA हो गया, 15 डे का हो गया, वो कैंडल के बीचों बीच है, मतलब मिक्स है. 15 डे भी वही है, 20 डे भी वही है, 15 मतलब 100 डे भी वही है, मतलब कोई ऊपर कोई नीचे, मतलब वो एक दूसरे को टच कर रहा है, और कैंडल भी वही पर है, मतलब ना मूविंग एवरेज ऊपर है ना नीचे है, मतलब ट्रेंड, मतलब
हाँ,
वो
मतलब
पूछ रहा
जो
हूँ मैं.
आप कहना चाहते हो ना, उसमें मैंने जो पहले बताया ना कि जो साइडवेज मार्केट रहता है, जब भी
हम्म.
हर एवरेज वहां एक जगह पे रहती है और कैंडल स्टिक वो मूविंग एवरेज के थोड़ा ऊपर थोड़ा नीचे या मूविंग एवरेज के ऊपर रहती है, उसका मतलब यही हुआ कि द ट्रेंड जो है वो साइडवेज जैसा
हम्म.
है. तो उसमें हमें ये वेट करना है कि वो ब्रेकआउट कब देगा वो ट्रेंड से. वो
ओके
जो
सर.
कंसोलिडेशन रहता है वो ऊपर की तरफ क्रॉस होता है तो एक अप ट्रेंड आएगा, और नीचे की तरफ ब्रेकडाउन देता है तो फिर नीचे का एक मूव आएगा. तो ऐसा जो सेटअप रहता है उसमें थोड़ा चॉपीनेस और वॉलेटिलिटी भी रहती है, और साइडवेज कहा जाता है बेसिकली इसको.
ओके ओके. और एक क्वेश्चन है सर, पूछ सकता हूँ मैं
हाँ
हिंदी में?
बोलिए. हाँ जी, हाँ जी, हाँ जी.
सर, मतलब मुझे ये जानकारी चाहिए कि हम ये कैसा अनुमान लगाए कि आगे चलकर, मतलब 10 दिनों में, अगले 1 महीनों में किस सेक्टर में रैली आएगी, इसका कुछ इंडिकेशन है? मतलब ये मुझे अभी तक पता नहीं चल रहा है.
नहीं, अभी इसमें आपको इसके लिए सेक्टर का चार्ट देखना पड़ेगा. अभी समझो कि आप सेक्टर का चार्ट
हाँ.
देखिए कि आईटी का
ओके.
सेक्टर है. अभी जब आईटी के स्टॉक सब नीचे गिर रहे हैं, तो आईटी सेक्टर
हम्म.
का चार्ट देखोगे आप तो उसमें आपको आइडिया आएगा कि कौन सा सेक्टर चलेगा नहीं चलेगा. तो आईटी नहीं चल रहा है अभी. अब आप
ओके.
देखोगे फार्मा है, फार्मा थोड़ा कंसोलिडेटिव से वापस नेगेटिव है, वो भी नहीं चल रहा है. तो आपको सेक्टर चार्ट देखना पड़ेगा. पहले मार्केट
हर के
देखो.
सेक्टर का चार्ट.
हाँ, पहले मार्केट देखो कि मार्केट ऊपर है नीचे है. मार्केट
हम्म.
ऊपर है तो ऊपर वाले सेक्टर ढूंढिए, मार्केट नीचे है तो नीचे वाले सेक्टर ढूंढो. फिर
ओके सर।
सेक्टर देखो, फिर सेक्टर से मालूम पड़ेगा कि ये सेक्टर वीक है या स्ट्रांग है, तो फिर उसमें जाके स्टॉक देखने का कि कौन सा सेक्टर में कौन सा स्टॉक स्ट्रांग है, या कौन से सेक्टर वीक है और उसमें कौन सा वीक स्टॉक है, तो वो शॉर्ट कर सकते हैं। और जो सेक्टर स्ट्रांग है उसमें कौन सा स्टॉक स्ट्रांग है वो ढूंढना है और फिर लॉन्ग करना है, वैसे इन्वेस्ट करना
ओके सर, ओके। एनी अदर आइडिया अबाउट इट? चलेगा सर, कोई बात नहीं, चलिए।
है। और ये अपडेट्स के लिए यू गाइस कैन फॉलो मी ऑन ट्विटर. My Twitter handle is at Bhavin1888. I will just enter it into. You guys can follow me on Twitter. I keep sharing charts on that, wherein there is good setup, good chart pattern, and possibility of a good move on the higher side, or vice versa. So you can get updates on Twitter. You can please join me with my Twitter handle. I have shared it on the chat box.
Thank you, sir. Uh, we have tried to answer all the queries. With your permission, shall I end the session? Go for the ending ceremony.
Yes, yes, definitely. Thanks, Harsh,
Yeah.
and thank you everyone for being so patient. And I hope this session was helpful, and it will definitely improve upon the investment or the trading that we are expected to do. So stay safe, and thank you very much.
Thank you, sir. Thank you all the participants for joining us for today's session. So NSDL hosts such interactive sessions, and you can register for such sessions through the link I am posting in the chat box. You can also follow us on our Twitter handle to get information about the upcoming webinars on different topics covering the securities market. We request you to also submit the provide the feedback by visiting the same link against the today's webinar. So if required, we can improve further. So hope the session was very much useful, and thank you, Bhavin sir. It was a very informative session, and patiently you had taken all the queries. Thanks
Thank
once
you.
again.
Thank you, Harsh. Thank you.
Thank you. We shall end the session now. So thanks for all
Okay.
of you for joining.
Thank you. Thank you.